We started the day learning that about 16% of the U.S. population has now filed jobless claims. However, the stock market itself actually was rallying pretty strongly to start the session, but then we ran into a buzzsaw about halfway through the session where some leaked data for a drug trial over in China with Gilead Sciences came out and really started to pressure the stock market. We ended up closing pretty much flat on the day. However, we did show some progress with the S&P 500 from the broader perspective as we now have price trading above a rising 30-day moving average, and the market forecast intermediate line is actually in the upper reversal zone on the S&P 500 for the first time since mid-February. So we're going to take a look at all of that. We'll then get into our trade application example where I wanted to feature a stock that is directly benefiting from the coronavirus and one that actually broke out to all-time highs here today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 23rd, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe while you're there. Check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related posts over on Twitter. Lastly, we have a presence on Facebook as well. Feel free to join our group by going to the web address that you see in the logo in front of you. All right, let's go ahead and jump into our charts here. As you can see, I've got chart 4B pulled up here in front of us, which will give us a foregrid that can give us a general sense of how the market forecast technical indicator is positioning each of these charts. Now remember, the background colors of the charts will signify whether we have a bullish or bearish market forecast posture. Now, the market forecast technical indicator is a resource that you can find over on the Thinkorswim platform with TD Ameritrade. So you're not going to find that with other brokers, but it is an interesting way to help you establish your posture. And there's kind of three main lines to the market forecast. You have your green line, which is kind of our default setting in this particular presentation. This is an intermediate term trading posture mechanism here. You also have a blue line and a red line, which have a little bit more sensitive movements there. So that's why we kind of rely upon the green line a little bit more. So anytime the green line has a bullish posture, we have this ThinkScript programming code that will paint the background color of the chart green. And that is the case right now with all four of our charts. In fact, you'll notice over here in the lower right-hand corner where we have the small cap Russell 2000, today gave us some new information there as well. We have a darker shade of green for the first time since going all the way back here to mid-February, and that signifies that the green line has risen above the indicator's midpoint, where we now would consider that strongly bullish as opposed to just weakly bullish. Now remember, the other indices have already had that strongly bullish posture since really the first or second week of April there. So it's really just the Russell 2000 that was lagging up until this point and finally played a little bit of catch up there to kind of join the others. So the other thing that I wanted to point out that I mentioned in the intro is that the S&P 500, for the first time since going all the way back here to mid to late February, has a green moving average. Remember that signifies price being above a rising moving average. So price had been above the moving average since really going back here to early April. But the moving average itself was continuing to fall. So there is a little bit of a change here, and that's a positive change, at least if you want to be bullish in the markets, which I would imagine most of you are. You know, most people have more exposure to the stock market to the long side than to the short side, just through your 401ks and different things like that. So this is a positive development that we're seeing here. Not only do we have the strongly bullish posture according to the market forecast, but now we're starting to see the moving average tilting its way back higher. And you know, one of the things that you'll want to look out for is that eventually we'll test that moving average again, and the hope then at that point is that the moving average is used as a support bounce area. We'll of course relay that information on to you as we see those things developing here on these daily market outlook videos. So that's a positive sign there. And I also mentioned that the green line on the S&P 500 entered the upper reversal zone there. So you'll notice that the intermediate line's reading right now is at 82 and rising. So this is the first time the green line has been in the upper reversal zone for the S&P 500 since going back here to basically February 21st or 24th, somewhere in that general time period there. So we've come a long ways. In fact, today was the 1 month anniversary of the bottom that we set last month, right here on the 23rd of March. You can see that the S&P 500 was down there just a hair below 2,200, and now we're just a hair below 2,800. So we've rallied over 20% off the bottom. Now, obviously, we're still down significantly from the all-time highs that were set back here in February, but we'll take what we can get. This is usually a gradual process. Usually the process takes about 18 months. This is actually going a lot quicker, assuming that these lows that we saw hold, and that is not a guarantee either. Things change on a day-by-day basis, and we always have to keep our eye on the news. One of the big developments here, at least in the United States, I know we have a worldwide audience here in this video, but here in the United States, one of the things that we're trying to keep our eye on is the state of Georgia is going to be reopening parts of its economy this weekend. And that's going to be, something that a lot of other states are going to be watching to see how that goes, if that's going to be a mistake of opening too early, or whether they're going to be leading the rally, forward and a sign of things to come, and hopefully pushing past, these difficult economies that we've had here more recently. So all eyes are on you, Georgia. Let's hope you don't screw it up. In all seriousness, we do wish you the best and hope that, y'all can stay as safe as possible there. All right, let's go ahead and take a look at another chart here. Let's go over to our 3 green arrows chart, and this one will be chart 4C, or actually 4D here in this case. And so as we look at this, you can see that the background colors of the charts on all 4 of these charts continues to be green. And that tells us that all 4 of our charts not only have bullish market forecast postures, like I showed you just a moment ago, but in this case, they all 4 have what's known as 3 green arrows as well. Now you'll notice again with the S&P 500 today getting its green line on the moving average, it is joining the NASDAQ composite that headed a couple of days ago. These other 2 don't quite have that yet. The Dow Jones and the Russell 2000 do have 3 green arrow signals, but their moving averages are still falling. And so, it's going to take a little bit of time to see some reversals take hold. But generally speaking, we've had enough time in the bullish seat here where, there's legitimate trend trades that are taking place. I do operate the 3 green arrows system still in my Monday top-down trend trading class. And we have been able to find appropriate trend trading candidates. Now, obviously, you're going to want stocks that look more solid than what these particular charts in front of us look like, because these are the indices that are going to contain hundreds of stocks. But generally speaking, if you're looking hard enough, you can find them. In fact, today's trade application is going to be a stock that we already own in my Monday top-down trend trading class that we bought some time ago that is breaking out to new all-time highs here today. So if you look hard enough, you're going to be able to find those types of securities. Even, somewhat boring companies like Johnson & Johnson hit an all-time high here today after, cratering to a degree. Johnson & Johnson was a stock that we bought in my dividend growth investing class last month at, it was $114. And if we look at where it's at today, it is trading at 155 all-time highs. So that is a very, very quick turnaround in what would traditionally be known as a very boring dividend aristocrat / dividend king type of a company. But of course, Johnson & Johnson's been kind of part of that story along the way as well in regards to, one of the companies that's trying to develop a vaccine for the coronavirus. So I'm sure that's probably helped the sentiment around the company during that time, in addition to announcing a dividend increase and also coming out with reasonably really strong earnings along the way. So, there are companies out there that, believe it or not, are hitting all-time highs at this moment in time, despite the stock market itself still being quite a ways off of its own all-time high. So you're out there trying to find those leaders, and usually the ones that are emerging to those new highs earlier in that process before the overall market hits its all-time highs, those are generally going to be the ones that are the market's preferred choices or leaders of this current rally. So keep your eyes on Johnson & Johnson and any others that are hitting new highs. Like I mentioned, we'll be reviewing one here at the end of this video. All right, let's go ahead and take a look at some 12-grid analysis now, starting with chart 5A. And these will be the asset class 12 grids. And here you can see we've got a couple of pink charts in the lower right-hand corner. The 10-year U.S. Treasury yield, which fell again today. It's at 0.61 at this current time. Oil actually had a more robust day. Now, we use USO in this particular 12 grid because it allows us to use the little label here that says oil. The downside of using the futures contracts, which in this case is /CL, is that the futures contracts behind the scenes change ticker symbols pretty much every month as those contracts roll over. So it just would look a little bit worse if it says unknown symbol right there. But that's a little bit more pure way to kind of get a sense of what's been happening here. Obviously, any way you slice it, there's a downtrend in place. But one thing I did want to point out is that we have had about 3 days worth of rallies here on the crude oil contracts themselves. And maybe we'll talk about this here in just a moment when we go over to our sector 12 grid. The energy stocks themselves have actually started to show some resilience. So I know there's been times where we've seen that before, and it usually ends in misery. But there's been some interesting relative strength in energy stocks in the last 3 days ever since oil prices went into negative territory for the May contracts. And so it makes you wonder, is that the market's tell? I brought this up on Tuesday as well, and I'm bringing it up again now because it's continuing to be the case. So maybe we'll look at a couple of those charts here in just a moment. Before we do that, let's get back into the mindset of the asset class 12 grid here and see what else is going on. Now, another thing I mentioned 2 days ago was gold. I've been mentioning this countless times in the last couple of months. But on Tuesday when I mentioned it, I said, hey, gear up for another bullish run in gold. For those of you that are bold enough to take a trade, this would have been an interesting time to do it. 2 days ago would have been this candle right here on the 21st. The reason I pointed that out specifically was because we had this breakout retest moment where it's retesting to where we had a double top here on basically February 24th and again here on March 6th. And sure enough, the last 2 days, gold has gone up significantly. It was up another 1% here today. In fact, on a closing high basis for GLD in this case, this is actually the highest close that it's had in many months. On an intraday basis, it got a little bit higher there on the 14th of April. But, there's been a pretty solid rally out of gold right there. And, I continue to think that's a very interesting place to be looking for opportunity to the upside. We already have some bullish trades going on gold and some of the gold miners, but for those of you that might not have exposure there yet and you're looking for an asset class that has some momentum, that looks like a pretty strong chart right there, much stronger than what we're seeing in just the stock market in general. So be aware of the big move there in gold. Now you will see that the US dollar has a kind of a pink background color as well, but in this case it's a light pink, so it doesn't have that darker shade like we saw over here on treasury yields. So this is one where I don't want to go out and say, yeah, it's a nasty bearish posture on the US dollar, because the truth of the matter is the price is still sitting just a hair above the rising moving average. So my own mindset is I want to see how this plays out, but I would not be surprised at all if we get a bounce off that rising moving average on UUP. In terms of some of the other charts here, of course, long-term treasuries are in a pretty steady uptrend there. Remember, that is oftentimes going to be the exact opposite of what we talk about with TNX, which is the yields themselves or the interest rates themselves are falling, and therefore the bonds themselves are rising, since those two are inversely correlated. You can see up above here, the S&P 500 was flat today. It was down just 0.01%, despite having a little bit more of a rally at the beginning of the day. So you do have some of those long upper shadows on our equity indices. You have it on EFA as well. You can see that EFA and EEM, which are our foreign indexes here. The EFA is going to be the developed foreign, and then EEM is going to be emerging foreign. Both of them underperformed the S&P 500 here today. They were both down about 1/3 of a percent here today. Let's go ahead and talk about our sectors now, coming on over here to chart 5C. And you can see we've got a clean sweep here in the United States. Now remember, this is the large cap version of these sectors, and I know that was something David was talking about in his portfolio management class here earlier today. So if you happen to miss that, make sure you check out the recording. But he was discussing some things like the impact of Amazon on something like discretionary, or the impact of, Alphabet and Facebook and Disney on communications, and the impact of Apple and Microsoft on technology. So remember that when we're looking at these XL sectors, so all of these start with the ticker XL, so XLF, XLC, XLK, etc. These are all market cap weighted. So they do lean towards the bigger companies for their influence. They are not equal weighted, but nonetheless gives us a nice clean way to chop up the S&P 500 and try to get a general sense of what's perhaps working and what may not be working. Right now, with the green backgrounds across the board here, you can see that most things are working to a degree. Now again, we just went through a 20% rise in a month, so it's important to understand where we've come from, and that's what's ultimately producing the posture, right? Pretty much all technical analysis is using data from the past, and of course the market forecast indicator is no different there. So it's using that data that we've seen in the last month to determine that we are currently in some stronger trends, with the stronger bullish postures in most of these cases. In fact, all of these cases have the stronger bullish posture. Remember, that is identified when the green line is above the charts or above the indicator's 50th percentile and rising, or just simply being above 80 in the upper reversal zone. And you can see as you read some of these labels here that even the weakest sectors out there, something like real estate, is at 64 and rising. So since that's above 50, that's why you've got that deeper shade of green there. So naturally, some charts are going to look more interesting than others. And one thing that you can do to try to identify some differences here when it looks like they're all the same with that dark green background is look towards the moving averages. That will start to help you identify where we have a little bit more strength than in other places. So if we went through that process, as I mentioned before, the S&P 500 itself just got its green moving average today because that started to wind a little bit higher there on SPY. But you can see that the same thing happened here with communications. It got its green moving average today. You've got another green moving average there on technology. Remember, it had it for one day there a couple of days ago, and then it went back to yellow, and now it's back to green. So communications, technology, both have the green moving average. You have a green moving average on the discretionary stocks. You have a green moving average on materials. Here's the one that I mentioned before that's catching a little bit of people by surprise. You have a green moving average on energy. It's been a while, right? With these other ones like technology up here and communications, right? We had those green moving averages in February, right? That eventually turned into red and yellow. With energy, it's the only one on the board that did not have a green moving average 3 months ago. So this is really, for energy, the first time in quite some time that we've had that. You have it over here on healthcare, of course, on staples as well. But I think it's that energy one that's catching some people by surprise, especially when the average Joe and Jane are picking up their copy of the USA Today and reading the headline that says oil prices plunging and going negative, right? And instead, what's actually happening is we're starting to see some resiliency in the energy area. Let me show you what it might look like on a 6-month basis. And there we do have some elements of green moving average. If we went back to the very beginning of this year, early January, we did have that. But boy, oh boy, has this been an area that's just been absolutely decimated. In fact, let me come over here to chart 4A. And we'll have this conversation because I did want to point out some charts that I've been noticing here. So XLE is going to be your ETF that tracks the energy sector. So these are going to be weighted towards the bigger companies like Chevron and Exxon, but you can see some positive development here. You see that we now have this background color green telling us that we went from a weakly bullish posture to a strongly bullish posture, and the moving average has gone from yellow to green, telling us that price is now above a rising moving average. You can see down below the impressive move that green line has made on XLE. And so naturally, if you start looking at some of the most influential members of that particular ETF, you can look at something like XOM. And you can see that all of a sudden XOM is setting up that way as well. You can look at CVX. Same thing. We've got a green line on CVX. In fact, it's been outperforming Exxon. You can see the green line from the market forecast perspective is in the upper reversal zone on Chevron. I don't think a lot of people would believe you if you said that, because again, you look back on the last 3 months, this thing hasn't sniffed the upper reversal zone, right? Prior to that, the highest it had gotten to was back here in mid-February. That green line was at 32 when this stock was up here at 110. So that just goes to show you how much progress it has made in terms of the market forecast technical indicator. There's some real mojo that's taking place behind the scenes here. One thing I did want to check, I'm going to come over here to the Analyze tab. It might not do this on, let me check XLE. I noticed one thing about a month or two ago. Yeah, it does do it. Okay, so this is somewhat newer to the Thinkorswim platform. I did tweet this out, so those of you that follow me on Twitter are already aware of this. But for those of you that don't follow me on Twitter, you might be interested to learn that for some select ETFs, they are going to show the top 20 holdings here on the Thinkorswim platform now, which is a pretty cool feature because that was something that was never possible in the past. And this does not exist for all ETFs, so it's just for the biggest ones at this point, but can be somewhat useful for us, especially if you're looking at these big XL E's, the XLKs, all of the XL sector ETFs. And so here you can see that Chevron is currently the largest holding of XLE, and I'm on the Analyze tab, if I didn't make that clear before. So Analyze, and then let me click off of it a second. It's Analyze and then Fundamentals. If you click on that and then type in XLE or XLK or XLY or whatever you want to look at, it'll start showing you the 20 largest holdings. And you can see in this case, XLE is pretty much Chevron and Exxon. I mean, it's basically like 47% of XLE is those two companies all by themselves. And then there's everybody else after that, right? You got EOG, you got Phillips 66, and there's ConocoPhillips and Kinder Morgan, which just came out with a dividend increase here in the last 48 hours. You have Schlumberger, which last week actually cut their dividend. Williams, Valero, Marathon Petroleum, Pioneer, Oxy, One Oak, Concho, Hess, Baker Hughes, Cabot, Halliburton, Fang, National Oil Well, Varco. And if you start looking at a number of those ticker symbols, they're all starting to show up a little bit more bullish. So if we kind of go down the line and look at EOG, we're starting to get some green bullish indications over here. Pioneer, there's PXD. It didn't have as good of a day there, but that's starting to show some progress there on that green line. If you look at Diamondback Energy, that was one of the smaller ones on the list, but that's a nice little move it's been making here recently. If you look at MPC, not quite to the dark green color on MPC, but I did notice its counterpart, MRO, the other marathon, the exploration and production one, that one does have that green background there. Now, a couple of the areas that have really been blitzed are the oil field services companies. If you look at Halliburton, it's a single-digit company these days. I didn't realize that until, a few weeks ago. I was looking at a few things. I'm like, wait a second, Halliburton is below $10 per share. That just didn't register for me because I've kind of always thought of it as one of the, the bigger, more important companies in oilfield services. But this is a $9 stock today, and that's after it went up 8%. But you can see as of today, Halliburton now has that darker shade of green and a green moving average as well. And then its direct competitor, Schlumberger, which is a little bit more international, its green line is at 40 and rising, so it's not quite to 50. Therefore, we still have that lighter shade of green, but you can see that we've had some nice progress here bouncing off the moving average on Schlumberger as well. So, there's some interesting developments that are taking place out there, and it does seem like there's something to this dash for trash that we've been seeing in the marketplace here in recent sessions. So for those of you that are a little bit more spirited, a little bit more speculative, you might want to start sniffing around the oil patch. There's some interesting bottoming formations taking place at a time where most people that just don't really look too closely at oil are probably assuming that they're getting destroyed, and really that's not the case. We're seeing some decent movement into those bigger types of names right there. All right, so that brings us now into our trade application example. One of the areas that I mentioned before that was still showing you some strength was technology. Not only did technology, so if I wanted to show you technology one more time, well, I've got you here, XLK. Not only does technology have that darker shade background color there, but it also has the green moving average right now as well. So technology has been a consistent winner. Now we've seen a little bit of holes there, here and there along the way, but for the most part, technology has been, somewhat able to withstand the pressures of the coronavirus because they oftentimes can equip people to work from home. And that's what I want to talk about today. One stock that we own over in my Monday top-down trend trading class is Zoom, ticker symbol ZM. And for those of you that have kids and they're stuck at home like mine are from school at this point, you might be familiar with Zoom. And some of you that, I've heard of people doing Zoom happy hours or, Zoom church meetings or, the reality of the situation is we can't really congregate together right now as a society. And that is the case in most areas of the United States and many areas across the globe. And so Zoom is one of these interesting technologies that has developed in recent years and has really sprung onto the surface here. Now, here at Market Scholars, we use WebEx still. WebEx was a technology from Cisco Systems that we had used with the prior company that David and I worked for, and we continue to use their services today with our current company of Market Scholars with all of our premium classes. But the more kind of exciting name is not WebEx, it's Zoom. Zoom has really taken the world by storm. Now, that's come with a little bit of growing pains as well. Some of you might have heard a couple of weeks ago that they got into some hot water because of their lack of security. And, some people that weren't supposed to be in the meetings showed up in the meetings and were doing some things they probably shouldn't have been doing. So, without a doubt, they've got some growing pains there and they're working on that. But it's interesting because in this short amount of time where Zoom has been kind of thrust into the spotlight, they've almost become a verb. I'll Zoom you, I've heard people say. And so it's interesting because, there are always opportunities in moments of crisis, and there will be some companies that take hold of that moment in time and really start transforming themselves into a major player. And I do wonder if Zoom is going to be one of those companies when the smoke clears from this whole coronavirus issue that we're all dealing with. Now, the reason I'm bringing it up today is, as I mentioned in the intro, it broke out today. So not only did we get a bullish posture back, so yesterday you had that pink background color, but today we now have that green background color as the green line started moving up again on the market forecast indicator. So that was good in its own right. But in addition to that, you can see that this candle was sizable enough that pushed us over this candle and over this candle over here. So not only did we hit a new all-time high in terms of a closing price, but also on an intraday price. And that was important because a lot of the reason for this sell-off over here is what I mentioned before. They got into hot water with some of their security, and people started to not trust them quite as much. So this would have been the time where this thing could have really sold off. Remember, this is actually a very large company now. A lot of people are kind of surprised. I don't know if the market cap will show up right now. I know sometimes the market caps disappear. There they go. $48 billion or $47 billion is the market cap on this. This is a large company. So, whether you think it's a fly-by-night operation or not, the stock market is valuing this at an extremely high valuation right now. This is a legitimate player in video teleconferencing. And if the stock market wanted that opportunity to sell this stock off, they had it right here. They had the headlines, they had the the security breaches and all of that. They could have continued just to push this stock lower. So by this stock hitting a new all-time high here today, it basically flushed out all of the negative sentiment that was around it from this double topping formation over here. So hopefully that's a pretty promising sign for this company in the future. Again, this is a company we do own in my Monday top-down trend trading class, because as you can see here, you look at this 3-month chart, that's a strong trend, ladies and gentlemen. If you're a trend trader, this is one that should be on your radar, and one that is directly benefiting from this whole crazy world that we live in, where we're doing so much more video conferencing. So what I thought we would do in today's case is an option trade known as a bull put spread. In this case, I've pulled up some weekly contracts, so be aware that these are the May 29th weekly contracts that I pulled up here. The reason I did that, normally I stick with the monthly contracts, but in this particular case, I wanted to have my short strike be at 135. So again, if we look at the chart, you can see 135 is effectively where the 30-day moving average is. And with the May monthly contracts, I wasn't able to quite achieve that. So I had to go out a couple of more weeks after the May monthly contracts. And so if I was willing to go out to the May 29th contracts, those are the ones that expire in 36 days, I was able to set up a bull put spread where I sell the 135 puts, I buy the 130 puts, I receive a credit of $1.20 up front. And if you run the math there, let's clear that out and click confirm and send. You can see that if I take the max profit of 120 and divide it by 380, which is the max loss that you see right there, then that means that our return on risk is about 31.5%. And that's typically what we shoot for when we're doing these credit spreads like bull put spreads. For those of you that are newer to this option strategy, basically what's happening here is you can see on this order confirmation dialog box, our break-even price is 133.80. The stock is currently trading at 169. So we're giving ourselves a nice wide margin of safety. And remember, that's important. Remember what just happened with Gilead here today, right? We just took a trade on Gilead on Tuesday in this presentation, but we gave ourselves such a large margin of safety that even with today's down move in Gilead, it didn't really, it wasn't really any sweat off our brow. Our sold obligation is at $62.50. So if Gilead sold off down to $77 today, we don't really care about that, right? So part of this is understanding which stocks are bullish. The other part of it is position sizing, risk management, what style of strategy you want to implement, and whether you want to give yourself, enough wiggle room in case you're just a little bit wrong with your entry. So in this case, it gives us, $60 to be wrong. And that might be needed. This is a very volatile security. If they came out with another security breach tomorrow, who knows? Maybe the stock sells off $10 per share. So 133.80 is our line in the sand here. I'm going to go ahead and send this in, but then I'm going to come back over here on the chart and show you where 133.80 is. And that's about right in this general area that I'm pointing at on the chart. So in other words, what I'm allowing for is this stock that just hit an all-time high today to fall about $30 or $40 per share, but if it does, what I'm holding out some hope for is that it's going to bounce off of this moving average back higher if that were to ever occur. You can see when it sold off the last time, it did come down to the moving average and it breached it for a few days, but eventually was able to bounce off of it. And it bounced off the moving average back here, and it bounced off the moving average back here. So in general, this is an upward trending security that's maintaining higher highs and higher lows. And therefore, if I've got my break-even price a little bit below that moving average, my hope is that even if this thing ends up finding some weakness in the next 36 days, that moving average will be used as a launch pad higher and thus protect my bull put spread in this particular case. All right. So with that, I'll wrap things up here. If you got value out of tonight's video, as always, the one ask that we have for you is to go over to Twitter and click like for us. We don't ask you to pay us any money. We don't bombard you with advertisements. We just simply ask you to support us on social media, and we think that's a pretty good trade-off for you guys. I think many of you would agree with that as well. It takes a couple of hours to put these videos together, and it takes the time away from our family and all that kind of stuff, and I know most of you appreciate that. So if you appreciated it tonight, as always, head on over to Twitter, click like for me there. David should be back with you here tomorrow with his presentations. I'll be doing my options for long-term investors class in the morning to sell some puts on high-quality dividend stocks for those of you that are interested in that sort of thing and are premium members. And then David will be teaching his technical analysis class a couple of hours after that as well. So lots of good content coming your way here from Market Scholars. So anyway, with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.